Welcome, everyone, to a brand new episode of In the Money with Amber Kanwar. Today's show is all about crypto, and we've got Matt Hougan of Bitwise joining us. Matt, thanks so much for being with us.
Thanks for having me, Amber. I'm so excited to be here.
How much do you regret doing this the day after the Super Bowl?
It wasn't a very exciting game. So, it's back to be something exciting to talk about.
Absolutely, yeah. We were all in bed by 11 o'clock, except maybe those Eagles fans. I don't know if they're in bed yet after the celebrations. Let's get started. The information provided in this podcast is for informational purposes only and does not constitute financial, investment, or professional advice. The views expressed by the host and guests are their own and do not necessarily reflect the opinions of any organization or company. The host and guests may maintain positions in any securities discussed on the podcast. Always consult a qualified financial advisor or professional before making any investment decisions. This episode is brought to you by BMO InvestorLine. We all want to make the most of our investments. That's why BMO InvestorLine is here. Their easy-to-use platform packed with tools, resources, and commission-free trading on over 100 popular ETFs can help you trade with confidence and take control of your financial future. Learn more at bmo.com/onlineinvest. Okay, Matt, thanks again for being with us. We just did an episode, actually, it was all about investments to help you sleep at night. And I feel like when people think about crypto, a sound night's sleep is maybe not what immediately comes to mind.
I think that's fair from a short-term perspective. If you look at what crypto does over any day, week, month, it can be up or down 5, 10, 15, 20%. I've lived through multiple 50+% pullbacks in crypto. But what I tell people about crypto and sleeping at night is taking a very long view. The average investor I talk to about crypto has 1 or 2% of their portfolio in crypto, and they plan to hold it for 10 years. If you've been doing that for the past 10 years, you're actually sleeping very well, right? You're up tens of thousands of percent. So it's really about portfolio sizing and time in the market. That's how you get to sleep well.
What is the right time horizon? Is it 10 years?
I think 10 years is a great time horizon. I think anyone buying crypto and holding it less than, let's say, 3 years is taking on a huge amount of risk. If you look at the history of crypto, there are multiple 1 or 2 year periods where crypto has been down, but there's never been a 3-year period where crypto has been down. And if you extend out, it's on this multi-year time horizon. People may remember other disruptive investments, like investing in internet search or investing in the growth of social or investing in the growth of mobile. All of those had huge volatility early in their growth years. And the same thing is true as crypto. So 3 years or more, I think you'll be all right. Shorter than that, yeah, maybe you'll have some sleepless nights.
What percent of your portfolio? I think that's a big question too.
Yeah, well, for me, it's an irresponsibly large number, right? So we won't
At least you
discuss
can
that.
admit it.
I know that, but I have very high conviction at a very long time horizon. The average Bitwise client has about 2.5% of their portfolio. What the academic studies show is anywhere between 1 and 5%. Above 5%, you really start to impact the overall volatility of your portfolio, and it's hard to hold through those volatile periods. 1 to 5%, you'll be all right. If it drops significantly, it's not going to change your life. If you get the kind of returns we've seen over the last 5 or 10 years, it is going to change your life, but in a positive way. So I think 1 to 5% is the sweet spot.
How did you get into crypto? Did you come from tradfi, as it's known, traditional finance, and did you get, when did you get bit by the crypto bug? And I do call it a bug because it's almost like a virus, right? Once people see the world this way, decentralized, it's hard to go back.
That's exactly right. Because if you dig into the underlying technology and the underlying philosophy, it's incredibly appealing, and you sort of think it has a natural course that is going to be very significant. So yeah, I came from TradFi. I spent 15 years in the ETF industry. I was the CEO of ETF.com, built the largest ETF conference, the largest ETF data service in the world. When I got involved in ETFs, people hated them. I know that's hard to think of now because they're like the apple pie of investing. But in the early days, the Financial Times called them weapons of mass destruction. There were congressional hearings about ETFs destroying the American dream. But when I looked at ETFs, I saw a new disruptive technology that could significantly lower costs for investors and that I thought would win over time. So with some great friends, built this company, ETF.com, to 100 people and sold it. When I looked around at what to do next, I was looking to pattern match. What is a disruptive financial technology that can significantly save people money, that can make the world a better place, but where people don't trust it because they don't understand it? And the answer to that was crypto, right? And what we're seeing over the last 5, 10 years is crypto going from this obscure technology that no one understands and trusts to today, it's a national priority of the United States government to lead in crypto. And we're seeing the largest institutions in the world, from BlackRock to endowments to large hedge funds, building businesses in this space. So I actually see it as a very similar journey to ETFs. And I think in 10 years, we'll all look at crypto. Everyone will be doing it. It will make the world cheaper. And people will be like, why were we so confused about this?
Okay, let's pick up on that point because certainly the election of Donald Trump seemed to unleash these animal spirits in the US in particular and really around the world when it came to crypto. But before I think we can understand those animal spirits, I think we have to understand maybe why crypto felt a little bit more suppressed under the Biden administration.
Yeah, I think a little bit is probably an understatement. It was it was a really difficult regulatory environment. I know when you tell people that, people say, yeah, whatever, but let me give you a specific example. Bitwise in its earlier days, we raised about $6 billion in seed capital from some of the largest venture capital investors in the world, folks like Khosla Ventures, General Catalyst, etc. And we had $6 billion in checks, and we went around to banks to deposit them so that we could hire US citizens to build an asset manager that was completely legal. And we got told no by bank after bank after bank after bank. Imagine that. Like, imagine the feeling of having multiple millions of dollars and just trying to find a bank that will take your money.
So, what did you do?
Yeah, eventually we got one of the most famous VCs in the world who was participating in the round to call up a bank and say, you need to bank this company or we're going to pull all of our business. So we were in a very fortunate situation, but a lot of entrepreneurs weren't. And this was just an example. We had the same thing from the SEC where we were trying to launch ETFs, did 30 plus meetings with them, ultimately be told no. And the industry only moved forward because the SEC was sued in court and lost. So I think when you think about why are there these animal spirits, why are markets up, why are so many people excited, it's that we were facing, gale force headwinds in the past, and now we have gale force tailwinds, and we get to see what this crypto technology that we've been talking about for so many years can actually do.
I feel like the elephant in the room is that after all of these years, it's still not super prevalent in everyday life.
I think Bitcoin, for instance, is well on its way to being digital gold. And you can see that in the adoption you're seeing from endowments and pensions and the largest institutions in the world. But outside of that, I think it's fair to say there hasn't been that much quote unquote real world impact. But what there has been is a demonstration that it works. So, for example, when I go and buy something at a grocery store, Visa charges a 2% fee for every transaction I have. I could also use stable coins where it's effectively free to move money and it moves instantaneously instead of taking a few days. And so people wonder, if you have this new technology that can save everyone 2% on effectively every purchase they make, why hasn't it made the leap into the mainstream? And the answer is traditional companies aren't willing to accept it. Large financial institutions aren't willing to build on this technology because there's too much regulatory threat. So I do think now is game time for crypto. If you can't see real world impact from this technology over the next 4 years, it means that all the hype was not worth it. But I also think that criticisms that, there's no real world impact have to collide with the reality that it's faced an impossible regulatory environment. So I think we're going to see that real world impact much faster and a much larger scale than almost anyone anticipates. I think it's going to be transformative.
So that's interesting you mentioned stable coins because they basically are matching, let's use the US dollar as an example, matching the value of the US dollar. And I think maybe at the origins of crypto, and there's probably still a big group out there that think of this as an alternative to fiat currency. Stable coins really depend on fiat currencies, but maybe transacting using them a little bit more efficiently. Have we moved away from, or do you think we've moved away from the possibility that we're going to pay for a cup of coffee using Bitcoin?
I think both things can be true at the same time. Blockchain is a disruptive technology that can be used in multiple ways. So, one way it can be used is to create a money that's not backed by the state. And I actually think Bitcoin is well on that way. I don't know if you and I are going to buy coffee with it, but I bet you in 5 years, in our increasingly multipolar world, where countries don't want to settle transactions in dollars, and China wants to settle them in yuan, and Russia wants to settle them in rubles, and the BRICS are trying to set up their own currency. I bet countries are going to want to transact in a non-political currency. And the only non-political currency that can scale is Bitcoin. So I do think it's going to establish this sort of monetary use case, particularly in international trade over the next 5 years as we move to this multipolar world. But at the same time, blockchain technology lets us do things with money, property, equity, et cetera, that we can't do in the existing system, right? Wiring money on a weekend is impossible. When you buy something from a store, the merchant gets their money a week later. Bill pay takes 5 days. Stock settlement takes 1 day. This is ridiculous. This is an instant 24/7, 365 economy. So you do something like stable coins, and it takes dollars and it makes them move at the speed of text messages. That's just a win. That doesn't mean that Bitcoin isn't important. I think it's enormously important. And I do think the establishment of non-state money is going to be a multi-trillion-dollar market. But I also think blockchains can speed up the existing financial infrastructure, which hasn't really advanced in 50 years.
I mean,
It's sort of crazy.
It is crazy, and I hear you on the potential, but we can't ignore what it has been used for to date, which is, largely scams, right? And doing nefarious things to try and evade authorities. And I know that a lot of people in crypto don't like to talk about that, or they'll say, well, guess what? The US dollar is used for scams as well. But that ignores the fact that there is a lot of thing particular to crypto that makes it easier to get away with things like that. And then on the flip side, people are trying to cash in on this enthusiasm and, luring people into things like meme coins. That argues for definitely a regulatory touch, does it not?
100%. Let me take that one first and then go back to the criminal question. The problem with our previous approach to regulation is that we refused to regulate crypto. Crypto had asked for regulation, they asked for regulatory clarity, but we refused to do it. Instead, we punished good actors and allowed bad actors to thrive. So here in the US, the SEC sued Coinbase, which is a publicly traded company that is relatively well regulated, has a phenomenal track record, and it didn't investigate, sue, or do anything with FTX, right? So we were focused on the good guys and not the bad guys, and that was wrong. We need regulatory clarity so investors understand the difference between something like Bitcoin and Ethereum, which are these, in my view, game-changing technologies with real fundamental value, and something like meme coins, which are ephemeral schemes in many cases and pump and dumps. We need to separate the good from the bad. If you refuse to regulate, then they mix together and people can't disentangle them. So I absolutely agree. We need regulatory clarity because there's a lot of great things in crypto and a lot of terrible things. And we need to emphasize the great things and let them grow and put the terrible things in a box, make people understand what they're doing. Completely agree with that. On the criminal activity, I'm going to push back a little bit, which is it's absolutely true in the early days of crypto, let's say 2011 to 2019, there was significant criminal activity across the spectrum of all the different crypto assets. That's just demonstrably true. But in 2019, there was a rule from the Financial Action Task Force that applied the travel rule to crypto. Sorry to get a little geeky, but what that meant is that digital asset service providers worldwide needed to be able to understand who their customers were and respond to law requests to freeze assets if they're found to be negative activity. And so whether it's Coinbase in the US or Binance overseas or others, they all apply AML, anti-money laundering, KYC, know your customer rules. And if you look at sort of government statistics of the share of illicit activity, they fell off a cliff because all of a sudden governments could seize things. So while there's still a lot of like hangover from its sort of illicit past, if you want to call that, it's been really substantially cleaned up to the point where the US Department of Justice says, Bitcoin's not primarily or even significantly used for criminal activity. It's actually a terrible tool for criminals. So I do think that has changed, but we still have the sort of the narrative overhang that the ghosts of crypto past that continue to haunt us in people's mind.
All right. Well, our listeners, our viewers, they love to geek out. So I think it's totally fine to take us down the rabbit hole, but they also like actionable insights. So let's dip into the mailbag. Okay, our first question is from Lauren in Calgary. And we've gone this whole time and we just haven't given people what they want. They want price targets. They want to know where this stuff is going. So Lauren, actually tuning into their very first episode, noted that Eric Jackson, who's a fund manager, suggested by the end of this year, Bitcoin could hit 200,000. What do you think, Matt?
Yeah, it's funny you call that out. Great question, Lauren. That's actually our forecast as well. $200,000 on Bitcoin. The reason for that is pretty simple. Supply-demand mismatch. Bitcoin produces about 165,000 new Bitcoin every year. ETFs last year bought about 800,000, and we think we'll buy more this year. When you have more demand than supply, you have the price going up. We think it goes to $200,000 or possibly more by the end of this year.
About the round numbers, let's go to our second question, which is about Ethereum. And it has spawned all kinds of memes because when crypto goes up, it just seems like Ethereum is kind of running in the wrong direction. And this question from Bart in BC, why is Ethereum languishing? Why is it left out in the cold?
Great question, Bart. Ethereum has middle child syndrome. So institutions love Bitcoin because we have this ETF, this structural supply-demand mismatch. And then the cool kids in crypto love Solana, which is an Ethereum competitor, but faster, cheaper, and it's the center of the meme coin casino, et cetera. And Ethereum is just lost in the middle. If you're an institutional investor, you're chasing Bitcoin. If you're a crypto native investor, you're chasing Solana or smaller assets. And there's no one chasing Ethereum. It's having sort of a debate on how it should structure itself going forward. I think it will eventually catch up. If you look at some of the things people are most excited about, stablecoins, tokenization, artificial intelligence agents operating in crypto, actually the most volume there is taking place on Ethereum. So eventually I think the fundamentals will catch up with reality. But right now, it's sort of suffering between this vice of Bitcoin on one side and Solana on the other.
And so, I mean, the Bitcoin, Ethereum, they're two totally different things, right? Bitcoin is digital gold and Ethereum is sort of an ecosystem where you can build decentralized apps on it. And this is where it seems like Solana is eating its lunch. And those that are thinking, well, maybe Ethereum doesn't ever rally is because, as you said, Solana can do it faster and cheaper than Ethereum. If you pit those two against each other, Ethereum versus Solana, do you have a winner that comes out?
My view is this like early stage internet search investing when you could have bought Yahoo or you could have bought Google or you could have bought Ask Jeeves or you could have bought any of these other names. But the right answer was to buy them all. In retrospect, it's nice to look back and say, I would have picked Google. But that was impossible at the time. You didn't know how things would turn out. As I look at like Ethereum versus Solana, my view is programmable blockchains are going to be much more important in 5 years than they are today. I want to own them all. So in my personal portfolio, I own some Ethereum, I own some Solana, I own 5 other of these programmable blockchains, and I just want to bet the field. If you forced me to pick one, if you said, Matt, you have to pick one and come back in 10 years, which is going to be bigger, I'd be very uncomfortable. I would probably pick Ethereum. I can explain why if you want, but I wouldn't know. I'd feel very uncomfortable. I feel much more comfortable just buying them all.
Well, let's make you uncomfortable. Why would you pick Ethereum?
There's this concept in crypto called the trilemma, which it's hard to build a programmable blockchain that's secure, decentralized, and fast. And what Solana has done is focus on being fast, right, and secure. Ethereum has sort of solved all points of this trilemma because it's solved the fast problem through the growth of L2s or layer two solutions built on Ethereum. So to my mind, it's sort of figured out this trilemma. And so it could be the most valuable blockchain in the future because it's the only one who's really figured out how to have all 3 points on this trilemma.
But it's expensive, again, isn't it? These, like, they're called gas fees. Like, that's
well, so there are 2 ways to process transactions on Ethereum. You can process things on the layer 1 blockchain, which is Ethereum, or you can process it on these layer 2 blockchains that feed into Ethereum. They're sort of like access roads next to a highway. And processing on Ethereum is very expensive, but on these layer 2s, you're talking about a penny or 2, soon to be sub-penny transaction costs. So those are very cheap. It's just a little bit of a mess moving around them right now, but I bet they'll figure it out. But, I could be totally wrong. Solana could crush it. I think that's entirely possible. Again, from my perspective, just own the field. It's much easier. You don't have to waste your brain cells trying to figure this out.
Well, speaking of which, I feel like that seamlessly brings us into our next question, which is about Fartcoin and Trumpcoin. But like, this is where people who maybe study at the feet of Warren Buffett are saying, this is why the market has gotten out of hand, because you've got these insane coins, not just Fartcoin, but also, Trump coin. And Joe from Halton Hills wants to know, what is the value proposition of meme coins? Trump did his meme coin. There's an actual Fartcoin. It doesn't seem like these should be valuable at all. How do you think about, what these are, why they run up, and whether you touch them with a 10-foot pole?
I think of meme coins mostly as either a casino or a consumable asset. In other words, people get consumption value out of buying a asset. People go to casinos, people play the lottery, they know they're going to lose, but they like the possibility of winning. And I think that may be, part of this story. So Dogecoin is a meme coin with a picture of a cute dog. But what separates it from Trump coin is it's been around for 10 years. It has staying power. It has no insiders, right? Part of the problem with many of these meme coins, there's huge insiders that sort of take advantage of secondary buyers. Dogecoin has none of that. But does it have utility? I'm not sure. It speaks to something interesting, which is the growth of internet communities. I find it intellectually engaging, but I don't think we're going to be buying our coffee with fart, Amber.
I hope not. That actually brings us to we did have a question on whether Doge is legitimate. So maybe elaborate just a little bit more on how because it seems like you do have criteria. You're not willing to maybe throw out all meme coins, that if there's certain boxes that are ticked, it's worth taking a look at. What are those boxes?
Yeah, well, look, what the problem with meme coins is twofold. One is that they're ephemeral, right? They're here today and gone tomorrow. And so you don't want to buy something that's going to go to zero tomorrow because you don't know how soon tomorrow will come. And the other is that they have this mismatch between insiders and the public. In other words, people are worried insiders launch these coins, drive up the price, sell them, and then try to profit immediately. Dogecoin has none of those problems, right? It's been around for 10 years. When it launched, there were no insiders. It followed like a Bitcoin-like model of launching. And there's no hidden sauce underneath Dogecoin. It is what it is. It's a coin with a cute dog. So if you want to speculate on a coin with a cute dog being more important in the future than it is today, God bless you. I think that's fine. It's a strong community. There's nothing inherently wrong. I just don't like projects where there's insiders benefiting at the expense of the retail public, or where it's a short-lived game that's going to end in tears in a few weeks or months. Dogecoin is not that. It's been around for 10 years. There are no insiders. I think it's fine. I don't own any, but I think it's fine for it to exist.
Well, that's a nice thing to say, I guess. The nicest you can exist. We're going to take a quick break. And we'll be right back after this. Okay, our next question in the mailbag actually, I guess, sort of goes alongside the Ethereum versus Solana conversation. It's about two others, Polkadot and Avalanche, both smart contract platforms that marketed themselves as superior to Ethereum for technical reasons. So everybody is trying to be like Ethereum, but maybe a better version. Is this one of the ones that you hold just to see which one is going to rise to the top over the next couple of years? Like, how do you differentiate between the two, if at all?
Yeah, great. I think Avalanche has an interesting approach. It's sort of a institutionally oriented business to business blockchain as opposed to a community driven blockchain. It does a lot of business development deals. It did a deal with the state of California to put vehicle registration online and on a blockchain. So I think it's interesting to hold in a portfolio as a bet that blockchains will have value to institutions and have sort of regulated adoption. That's sort of how I see that. Polkadot had an interesting technological architecture. I know there are a lot of people who are excited about it. I think the world may have passed by that technological architecture. So it's not one that I spend a great deal of time thinking about today, but I do spend a reasonable amount of time thinking about Avalanche.
This next question is from Julie in Toronto. Do you think NFTs will regain value? Do you have a view on which ones? Let's maybe just take a step back, remind everybody what NFTs were, because they were all the rage for a couple of years, non-fungible tokens.
Yeah, non-fungible tokens. You can think of the mainstream NFTs today as sort of digital artwork that you own that's recorded on a blockchain. I absolutely think they'll come back, right? So I think of NFTs as a derivative of the wealth of the ecosystem. There are a lot of people who live their lives inside crypto, who value their life within crypto. And whenever you have that kind of society, they'll want status symbols and they'll want cultural totems and they'll want to own them. You think of something like CryptoPunk, which was one of the original NFTs or among the most valuable NFTs. There is cultural cachet within the crypto industry to owning a CryptoPunk. They've sustained over multiple periods of time. If you think crypto is going to go from a $2 trillion or $3 trillion industry to a $10 trillion industry, and its original sort of totemic cultural objects are not going to increase in value, I just don't understand why that would be, right? It doesn't match with any other society I've seen grown and evolve over time. They always have these cultural totems, and they tend to be a fraction of the wealth of the industry. And so I suspect that will sustain over time.
Do you have a checklist on like what you're looking for if you're going to invest in an NFT?
I mean, we run a blue chip NFT index fund. My view is that there's sort of an exponential decay curve between the most interesting and most exciting NFTs and the long tail of stuff that will go to zero. So I think a handful of projects will stay very valuable and many will go to zero. I'd also add there's some things that are just cute. Pudgy penguins are just cute. I don't care what people say. And I think they're executing well from a development perspective. There's some art that I find personally interesting, but it's kind of like asking, what art do you like? You and I may have very different answers. And I think that's fine.
All right, now it's time for a look at Matt Hougan's Pro Picks, his best ideas in crypto. This segment is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Okay, Matt, this is where you lay out your three best ideas, and we're going to forgive you that they're all Bitwise products. And of course, you're the CIO of Bitwise, so it does make sense. But you offer various ways to get exposure to the crypto sector. And before we go through each of them, talk to us at a high level about your approach, investing in a cryptocurrency directly versus an equity that is exposed to cryptocurrencies. Like commodity investors, they can choose between investing in gold or the gold miners. Is it a similar sort of trade-off, or do you just want to own the whole space because you're so bullish on it?
Yeah, well, my base case is to own the whole space, which is to own the crypto assets and own the crypto equities because they're doing slightly different things, but I'm bullish on the growth of the space. I do think that analogy to owning gold versus gold miners is a good one. There is Bitcoin and there are Bitcoin miners. Some people feel comfortable holding the real thing, and some people feel comfortable owning a company that generates profits and has a balance sheet that you can investigate. It has quarterly statements you can review. And I think both are valid. The most important thing is sort of to get off zero. The best case, you own both.
Okay, well, let's get into it. The first one is owning those companies. It's a Bitwise Crypto Industry Innovators ETF. You'll get MicroStrategy, which, has been the trailblazer in adding crypto to its balance sheet, but then you get exchanges like Coinbase. You got Galaxy Digital in there. How should you think about what these companies offer for you in crypto?
Yeah, the thing I love about the strategy, it has a screen that focuses only on companies that really engage in the crypto space. So the vast majority of the index must be in companies that derive at least 80% of their revenue directly from crypto. And what you get from this space is participation in the crypto ecosystem in all parts of it, and almost in a non-correlated fashion. If you think about something like Bitcoin miners, they're directly correlated with the price of Bitcoin. As the price goes up, they tend to make more profits, their stocks go up. If you think about something like Coinbase, it's more varied, right? The more volatility there is in crypto, the more trading volume there is in crypto, which falls to Coinbase's bottom line. They're also doing things like participating in the stablecoin ecosystem through basically a half share of the largest regulated stablecoin that exists. So you're getting exposure to that growth as well. Again, my base case is you want to diversify your exposure in crypto. And if you just hold Bitcoin, you don't have exposure to tokenization. You don't have exposure to stablecoins. A product like BITQ gives you exposure to those themes within an equity package. And I think that's a nice thing to add.
The second one is about that broad exposure. It's the Bitwise 10 Crypto Index Fund. Is this just owning the 10 largest cryptos?
It's close to that. So it's owning the 10 largest cryptos after screening out assets with significant risks. So we've been running this strategy for 7+ years now. We've managed to screen out some of the worst assets in crypto. You might remember the Luna stablecoin, which was briefly the fourth largest asset before it went to zero. That never went into our index because we were able to screen it out for failures in its token economic design.
You should have told Mike Novogratz before he got a tattoo of Luna.
Exactly. We publish our holdings every month, so he could have looked. But we screened out FTX's token. We screened out a number of tokens that have ended in tiers. So you can think of it as a smart index-based strategy. What I love about it.
What are you screening out now?
Oh, we screen out a lot of assets. What are some examples? We don't hold Binance Coin because I think that may be deemed a security by U.S. regulators. We don't own Dogecoin, to go back to our analysis, because we don't hold meme coins in the index. There are a large number of assets that don't make our screens to get into it.
Well, I just want to recap. So no Binance Coin, no Tron, as you said, and no Dogecoin, even though you've said, it could be of the more legitimate fun coins that are out there. You were going on to say what your approach is to get included in this index.
Yeah, the flip side of that is we look at the largest assets that meet these risks, that can be custodied by regulated custodians, that are liquid, that we don't think are at risk of being deemed securities by federal regulators, that don't have an underlying token economic flaw. And then we hold them and rebalance them every month. The beauty of this is if the only thing that matters in crypto is Bitcoin, over time, the index will only own Bitcoin. If Ethereum becomes more important than Bitcoin or Solana jumps, the index will automatically re-update its portfolio to hold more Solana or hold more Ethereum or hold the latest new asset that emerges. A lot of investors are just putting 2-3% of their portfolio in crypto. They can't spend 50% of their time staying up to date with the space. So an index-based strategy lets you buy crypto, understand it's professionally managed, it's avoiding the lunas, but otherwise it's holding the winners. I think it's one of the best products for broad-based investors to access the crypto market.
And then your third one is just the Bitwise Bitcoin ETF. I know you're going to get this. You have to defend it all the time. Why would I buy the ETF if I could just get exposure to the owning crypto itself?
Yeah, first of all, I should say I love people who buy Bitcoin and self-custody it. That's the sort of OG way of owning crypto. And I think people who do that are doing it well. If you're not going to self-custody it, if you're going to buy it from an exchange or buy it from an app, the ETF is just the cheapest, best way to do it. I mean, there's no two ways around it. The expense ratio is 20 basis points. The trading is done by institutional traders with sort of decades of experience in the space. The custody is with the largest custodian in the world. It's audited, it's regulated. You'd have to be investing $5 billion to get those kind of terms from leading custodians in the world. Or you could buy our ETF and invest $10 and get the same deal as the largest institutions in the world. Yeah, I mentioned I come from an ETF background. The beauty of ETFs is they let mom and pop investors invest on the same terms as the Harvard endowment. And that's what Bitcoin ETFs are doing. So they're an incredible deal.
Matt, thanks so much for joining us. We appreciate your time.
Thanks for having me.
That's it for this episode of In the Money with Amber Kanwar. Make sure you tune in to our next episode. We've got Ross Gerber on the show. He's talking tech stocks of Gerber Kawasaki. You know what to do. You can get your questions in. You can email questions@inthemoneypod.com. You can find us anywhere on social media @inthemoneypod. Visit our website, www.inthemoneypod.com. If you're enjoying the podcast, give us a like, give us 5 stars, whatever the app is telling you to do, and we'll catch you next time on the show.